Hello guys, glad to have you on board again today. So let's sum up the information we now have available for us after this Fed meeting. Obviously the worst case scenario has been avoided. We had some kind of an in-between thing, but still odds were pretty much what I was expecting, which means we have finally a differentiation between the Fed's vision and the White House ones, which means a question has been raised saying or asking Powell why there was such a gap between Trump's projections of 4% GDP annualized versus the expectation of the Fed, which is pretty much halfway through, which is approximately 2%. So he's basically said, if you just flush out the bankers' vocabulary, just basically said, okay, we don't understand those 4%, what we see is 2%. We do work out of what we project, and what I kind of intend to say is that in some points, assessing economical behaviors and forecast is most likely a banker's job, so more likely Powell's and the Fed's job to do so, not necessarily the president's job, meaning the president is not an economist and far less from being one, not to say he's probably the dumbest one we've ever seen, but that's how it is. I mean, at some point it means we do have Trump not necessarily, or at least we have Fed saying that Trump's projections are probably bullshit, just like we would have expected, but I was expecting this split to occur at some point. Anyway, we're going to dig a little deeper into the Fed statements right after, or the press conference, no statement, but this is what we have in cryptocurrencies. So I just have a little new information to show up, which is visible in here on the 1 hour chart time frame. You can clearly see that we were building a downward move recently in a downward channel, and you know cryptos in a short term pretty damn like channels when they're ranging, and then they like to fuck up those channels when they're trending. So we're obviously not trending right now. We had that first bearish channel, exited, and multiple closes from the upside, by the upside. Suggesting that this is exactly what I thought it could be, which means we might have terminated the first set of two waves to the upside, and we might have terminated the first one to the downside, which means we're at that stage in which we have this, probably we're building this, and I can expect still another set of downside expectation in the following days to follow through and catch up on the support context. And I would say the 1 hour chart time frame is definitely the one that shows the most reliable information so far. In a triangle, what you're generally trading is approximately 61%, at least, or close to 61% retracement of the previous waves, which means that gives us a minimum $134 for Ethereum to retrace down to, and normally the build, so it's minimum there, maximum there. So we have a support area cluster in which we'll search for range reversal opportunities for those. What the hell is that? What the fuck is this? All right. So this is the area in which normally a bullish reactivation should set itself. It's hard to say because I still don't know how prices will go there. I still don't know if prices are going to go there, and I don't know what signals they might be triggering. So I suggest you patiently wait for something to play its game, and we need this support to be built up to confirm the triangle's formation. At this stage, it still remains highly speculative. All right, but it's just for guys who want to play along this range on an intraday basis, and I would say anything lower than 1 hour chart is just pure fucking noise. So you don't even try to trade this. The lowest possible thing I can give you, the most aggressive stuff to trade, is this. The 1 hour chart triangle. Trading a triangle is goddamn risky, so definitely the best choice in here is just to wait for this triangle to build itself and to be broken to the upside. and to trade the bullish breakout in a trending attempt in the side of the previous uptrends. This means that this is the low risk trading I see in here, and that's it. So I would suggest eventually, for those who absolutely want to trade Ethereum, this is possible. I still stand out waiting for the daily charts to purge this triangle and to find some new upward move heading to the trend channel once again would be a good sign that we are heading to further retracements. Those 14.6 Fibonacci retracement, that seems to be like a minimum to me. And going there once again doesn't even mean that we have the bottom once and for all. It just means we're testing back the bearish resilience. And it's just a fucking 14% retracement. Imagine how crazy low this is. It's just the first step among an emerging sentiment of terminating the bear trend. So don't misunderstand me and don't misinterpret what I say. It's definitely just the first step in the direction of a potential bullish trend to emerge out of further years to come. All right, and definitely not months. In here we're talking about real long-term stuff, and it doesn't even mean that a trend will emerge. We could just be ranging out of this bottom and the bubble stop we've been building last year. All right. That's it for cryptos. Now let's go back to the big game, where there is billions at play, the stock market. So in here, the play is definitely different. And today I'm going to, first of all, I'm going to thank one of the users, which is this one. God damn it. All right, this one. No way. So, hi Phil, thank you for every day. I love that learning a lot, so thank you guys for something in return. I want to share one observations on indices, which I noticed first on the Dow Jones, and then on the SPX, and today it happens on the NASDAQ as well. And this is really stunning because when I see this, I mean, things I am definitely supposed to see, I would bet on the thing that anyway I would have sold at in the forthcoming days. But still, some of you guys start to see the things I was used to use, and you see those things even before I do. So all I can say is just, oh god damn it, yes, that's great. It means that what I'm doing in here, the reasons why I'm doing those daily shows, those daily stuffs are really working well. It's doing what I expected it to do. I'm transmitting my knowledge and you guys are using it even better than I do, which is more than I would ever expect. So that's great. I mean, if you can find my own patterns even before I notice them, then just great. And you definitely done something great in here, noticing that they are all reaching exactly 85.4% retracement from all-time highs. And it definitely means something to me. It means that today we're going to just switch a little bit. I don't like that word, switch, but all I can say, we're going to introduce an alternate scenario. What I've been telling you previously is that I still forecast that as we're missing the shots in here, as we're reversing in here out of this long-term trend channel built out of the latest two lows and the previous highs, as we're reaching here, which means to me the target is to reach out the bottom of that trend channel and probably to break it down if things turns out to be a little bit more ugly than expected. I mean, if we do have more than an economic slowdown, but switching slowly to recession trades. Because I think this is what's going to happen, because I think we're at the end of an economic cycle purely and simply. It is not the job of central bankers to say we're heading to recession. They're just assessing what's happening right now. We do have a slowdown, but eventually before slowing down, before recession, we need to slow down. I mean, first the growth expectations are dampened, and then we eventually later on figure out that they're just switching to recession, pure and simply. All right? So that's exactly what I expect, contraction, and I still tend to believe that this is a move that's going to set itself toward the next few months. So things should start to deteriorate and the sentiment as well. If it doesn't, then we're never ever going to break down this trend channel. Obviously, this is, I always told you, the long-term trades, the weekly chart scenarios relate and have to work with economy. So if we're assessing economy to reverse into recession trades and into recession, then the trading will have to be done accordingly, which means we'll accelerate to the downside and definitely break down those channels. But if it doesn't happen, if we just dampen the growth and it never switched to recession, then why should we have to break down? We probably don't do that. So let's put it that alternate scenario. It's going to be a fourth scenario. So remember, we got the first one going in there and things keeps on deteriorating until we break down this trend channel, and normally we should follow through on this pitchfork, which means anyway, the latest we could do is 13th of October 2019, or even there, it's the point in which the previous low in here is going to fail to that trend line. So yeah, it's October 2019, and normally that's the latest time we have to break this low. Because of this, all right? So as long as this plays accordingly, this is the latest time we could be maintaining prices on top of this low. Afterwards, the ugly will definitely come up, all right? So this is about timing, which is the hardest thing in trading to assess, but yet, as we're failing this goddamn 85.4, and as we do it on every index on a very precise way, just look at the goddamn NASDAQ. Let's put a perspective in here as well. Same thing. We're overcoming the weekly context without a single reason to do so. So it could be just a goddamn range. All right? And let's be honest. I don't know if the economic slowdown is going to turn to recession. All I'm going to tell you is that I'm ready for it because there are cyclical elements suggesting that we're overexhausted in a monthly chart as well. But in a weekly perspective, what we have in here could be just a goddamn range. Just look at this, how precise it is. NASDAQ has been playing its 85.4 precisely yesterday on the Fed's day. So it's hard to say if we're definitely going to reverse in here because the reversal in here is pretty much immature and has no signal. But we're squeezing, which means we could very well fuck this up instantly to the downside, and it would act like a signal, not the kind of signal you could be aggressively trading. All right. In here, there's no divergence. All right. We don't have the divergence. We do have the weekly bearish cycle setting itself. All right, which means normally we should have more downside, but we still don't see the bears. But that doesn't mean the bears won't show up instantly and brutally reversing what's been happening recently. It can very well happen. All right. That's what I think will happen, by the way. So we need to assess that. We're definitely into weekly range context to trade, all right? We're lacking of signals in the NASDAQ, but we do have those signals on the SPX and the Dow Jones. But the Dow Jones, same goddamn thing, but not in the same way. The Dow Jones has been more bullish. It's been reaching out to the 85.4 prior than the other indices, but anyway, instead of making new highs, this one's just failing and creating a downward trend line. So what I would say out of this is that, call that however you want, but every indices, even though they had different structures, the SPX bullish but kind of in between, the most bullish one being the NASDAQ, who's been lagging and pulling significantly at the latest run we had, all right, and that's definitely not a good pattern for the stocks when the growth stocks are surging. Generally, they're surging to terminate the moves. So it could very well say, yes, that goddamn move is exhausting itself, is very late stage trading. And even how brutal this has been, this still remains a range. If it is, then all those indices will have to be applied the range strategy. So remember, like I said, all the options we had previously were those ones. All right, that's some of the core informations. I told you we've got first option, the most bullish one, which we keep on going in here, which means anytime we go back to support, we find some support until we get to historical highs. Okay, and we keep on rising in this trend channel and we fail breaking supports. And in that perspective, we're just going to probably keep on rising to historical highs and probably exhaust and dampen ourselves into the 127 to 138 extension of this, or retracement of this first bearish impulse. Which means we're not necessarily bullish, we're still bearish actually, but we'll just go there first to fuck up those who are too bearish, and then we'll fuck this up, all right? So in that perspective, I'll just let it go for a couple quarters and just basically play the same scenario by the end of the summer for a market to crash, all right? That's one option, all right? Not the one I favor, but the one I still think probable. Second option, like I said, very less probable, but still possible, the bubble. meaning we go through the historical highs and instead of dampening, we're accelerating to parabolic scheme moves. I don't even think this is possible, but very less probable, but still possible. I mean, chances like below 1% chances to do this, but still possible. No 0% exist. This thing is possible because everything is always possible. All right, so scenario 1, scenario 2, but very less likely to happen. Scenario number 3, the one I trade, all right, the one in which we dampen in here, we fail with a lower high on weekly charts, and economy keeps on deteriorating, and prices will obviously follow through toward possibly a target down to 100 and below 1,800. Second option, a fourth option, which will be this one, if we do just fuck up all this. I mean, economy performs great and kind of stays the way it is at a 2% growth rate and doesn't deteriorate further away. Then if that is, then there is no reason for us to break this down, I think, in a weekly chart perspective, and we could have an in-between scenario in which we buy this dip in here, in the blue area, in which people will panic in here. But if we panic and if economy just stands to the 2%, then it's probably going to be a buy the dip. And if we buy this dip, I'm not going to be a buyer, and let's be clear, I'm not going to buy that. Absolutely not. But I will partially profit take in this area, definitely, instead. All right? Which means if we go there, and if for some reasons the market is dipping in here, and we're buying, all right? Which is a possibility. We've got a pretty dense cluster in here. We've got a half of this pitchfork. We're going to have this Fibonacci fan as well, and the blue support area. If we just go dipping in here, I mean, we forecasted this area late April, early May, we could have a very dangerous volatile burst. If this volatile burst plays its games just like that, and if we dipping in here, all right, and if after that dip, everything just goes fine, I think we're going to do something like that, dipping in here, pullbacking, but if this pullback doesn't play along this to play like that, all right, if for some reason in here we were doing this instead, I will definitely want to profit take in here. I'll do a 50% profit taking, and I'll obviously reinvest in here regarding the signals we could have, the new informations we'll have back then. We're playing 2 or 3 steps ahead. So let's do it simple. We definitely have a decision cluster in here. I think the next one is going to be in this area. And I think everything that's going to happen in here is just going to be for the dumbs. All right? Because and now that I see that 85.4 retracement exactly on all those indices, it's just rise a red button, or it flashes a red button that tells me, okay, Phil, you might just have it to consider this range scenario, as it's not, it could be the dead cat bounce, but normally a dead cat bounce is 61 to 76. We should have failed in this area and never have reached down to this one. And as we reach down here, you could just say it might be not that bad actually. And if it isn't, if for some reasons we manage to recover and not switching to recessions, then I think this range option could be pretty fucking viable for the years to come. To spending like 1 year dying in between those two boundaries and spending most of our time in that dumb area. All right? As for example, we could get in here, but it's not going to be exactly like that. I mean, it could just be we die in here and then bang, 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 noise, bang, and we just die in here and volatility gets to contract. If we do this, it makes totally a sense, but it has to be followed through by the economy, which means economy is hesitating between good news and bad news, but we're still maintain some growth. If we do this, I don't see any reasons to go down to 1800. That's a fourth option. I would say right now, the odds for this option to play out, what the hell did I just do? All right. To me, the options for this scenario to play its game are less probable than an economic slowdown that leads to recession, because I think recession is necessarily, is very likely going to happen. But I won't say that an intermediate scenario isn't impossible, because the technical signals I just had by reaching out to those levels suggest that prices might be anticipating this as well and not necessarily a recession. So be aware of this. As for now, I'm going to be trading this cluster to be the big, nice decision cluster. And remember what I've done basically. Because if I do this, it's because I do something regarding my portfolio management. A change has been done. Previously, my first profit taking was in here. I'm going to be honest with you guys, I don't even target this area anymore. I'm going to take my partial profit taking in here. So I'm taking a little bit more risk, obviously, but I think this area is for the dumps. So I'm not going to trade in the dump area. I think I'm just going to let guys buying in here, which I think will be a mistake, because I think we're going to go probably down to this price instead. All right, because it's a range, and in a range, we're just going to fuck up whatever seems to be rational in the shorter time frames. And I think what is really at play right now is that weekly range. Big range, and until we've got new informations. Obviously, if we go there, by then we'll have new information. So I might have to adjust to the new risks or degradation we could have in between. But so far, all I can tell is that prices tells me that an intermediate scenario is possible today. So thanks a lot for this user who's been pointing this up to me, because it simply rings a bell, and this is a pattern I very well am familiar with, which seems the level of indecision might be higher than expected, and we have to assess more possibilities therefore. All right? I still forecast that the most probable is a profit-taking number 2 in here at the downward area of this trend channel, and if things keeps on deteriorating, a final target below 1800 at the extension of this channel to the downside, but still we'll need further information to confirm those targets to be viable to reach out to. That's it. Now let's have a look at the side effects of the Fed's meeting. The dollar has been falling and breaking down supports, which I was expecting, obviously. Now the thing is that before actually breaking down those major lows, we're going to have to build a lower high. Question is, where is this going to happen? Are we going to go sideways action on the support before breaking it down? Are we going to retrace to my entry prices for a reinforcement? Or not. It's hard to say. The final targets remaining there, which means we're still in a speculative area, needing to manage the risk and not being leveraged. Waiting for this area to be cleared. I think now that the downside is way more probable, so odds are rising in my favor, but still it's too early to be really aggressively positioned in here with leverages. So we're gaining strength, but still the battle isn't over. The battle isn't over, and certainly not the war. Okay, so to me, there's a battle in here. We're gaining strength to win that battle. There is going to be another battle in here, and the war terminates whenever we get to my final targets, which are already fucking lower than that. But still, before we actually get there, it's going to be a long run. These are weekly scenarios as well. It's not going to take 2 months to get there. It's going to take quarters to get to my final targets on the dollar. So anyway. So what do we do in the shorter time frame after the Fed? I would suggest we patiently wait. What's been happening in here is great, but I think some kind of a pullback may just be at play in the short term. Kind of, we're dipping, we're breaking supports, we have to build a range in here. God knows how much we will retrace. So put your retracement, your Fibonacci retracement in here, and that's what I think is the most reliable information to do right now. To just wait for this to exhaust itself. All right, we're going to use standard fibs in here. Don't need the range strategy. We're bearish ranging right now. Okay, so it is not necessary. I would say wave to target. So minimum 50% retracement. Okay, we could just do something like that and bang. Okay, we could as well keep on falling. There's no problem with that. We just broke the support, but we can just keep on pushing further away. I mean, breaking down the context channel would be a good sign in a 4-hour chart time frame. I would like the market to do so. So we could dip further along. All right, could be just a pullback after the Fed's effect, and dampening this to push to a divergence will be great. I would like to have a divergence on this momentum, kind of something that we're pulling back, but we're fading with a higher high, but still higher low in here, hidden divergence. We push to divergence in here, and then we retrace to build those retracements. That's an option. That's the one I would favor in terms of technicals, to kind of try to get in here, dampen, play the hidden divergence, and then push to bearish, to bullish divergence by making a new low, slightly lower. For example, in here would be a sign going like 95.6, and then I will just let the market to digest for a bit. going in here or going to the bottom of the range. All those options are viable, all right? But all I would say is I'm waiting for this wave to terminate, to retrace for a bit, and after this retracement will be done, all right, I'll wait for further reinforcements in here to target the market to fail. What I would like to see is accumulation, as we would be trending and breaking down afterwards. The normal structure, I remind you that this is in the PDF manual, so I hope you guys know about that. The trend channel is going to deteriorate like that, okay, if we keep on pushing downward. What I would like is the market to pull back to this trend channel and seeing signs of bearish reactivation. I would like to see the price pattern doing context, trend channel, back to context, and both of them breaking down. If we do have this, then this is definitely what I would like to trade for a breakdown. So I'm going to play an accumulation. The next time we're going to play near the trend channel in the 4-hour trend line, trend channel, which is the 1-hour context. So what I'll do is that I'm going to put this alert right away. And I'm going to wanting to be alerted anytime we get into the bearish context of a 1-hour chart, in which I'm going to search for a bearish signal to play a accumulation structure in the 4-hour time frame. I know it can sound a little bit complicated, but I'm not easing things for you guys. I need to be honest. I rather like to push you to the hardest, even if you don't get everything. It's just by repetition, by seeing those complex stuff being played every single day, the same way that you'll see the strategies emerging, that you'll see the repetition. That's how you're going to get to learn those stuff, even how complicated they could be to you at the first glimpse. So let's do this. DXY, crossing, frameworks, context resistant down. So I would just want to know anytime we are entering the resistant context. But normally we should break it, remember? No, though I would just be alerted as quickly as it possible. So I would say I want to close in this. So DXY H1, search for bearish signal plus confirmation. All right, the context is accumulation on H4 before breakdown. All right, so what the freaking fuck? All right, I'll have a look at this just to make sure, but for now we'll just keep on going. All right, so this alert has been created. All right, it is great. So what we're doing right now and right here is that anytime this alert will trigger, I'm going to search for a signal, and if this signal triggers, I'm going to apply the strategy in a 4-hour context, which means I'll be selling the trend channel, putting a stop at the previous market high, which is going to be there. So my stop loss, when I take this reinforcement, I'll have to push my stop loss down, proceed to the latest top, and then either the market takes me out of the game or validates, breakdown, and then I'll go leverage trading afterwards. All right. Obviously, this scenario is exactly what I'm going to play on the euro dollar, and definitely the one I'm going to play on the GBP dollar as well. So what I'm doing in here is waiting for GBP to reach out to his trend channel in here, which we are very, very closer than the euro dollar and anything like that. All right, so euro dollar, the context, the trend channel is pretty fucking far away. But in GBP, I think the market is already heading to accumulation. We've been context trading after rejecting the trend channel, which means it should ring the bell. We might have a breakup on the GBP. It doesn't mean it's necessarily going to happen, but you have to play accordingly. And from what I can tell, I want to play this game because I think, I strongly think that this breakout can occur. We're mature enough. I mean, the Brexit deals, even though how bad this could look like, isn't that bad after all. We're starting to figure out that, I mean, anyway, it's going to have negative effects, but not necessarily on the currency. We might have played the worst case scenario for the currency, but I think anyway, the worst is most likely going to happen with the FTSE. All right, I definitely think that this is where I want to trade instead. I think this is where the ugly part will play, because I think we're in a bearish thing, okay? It is not divergent regarding how crazy high we've been paying that shit. But I think anytime we're going to have a bullish trend in the GBP, Oh my lord. I mean, you need to be knowing something. The FTSE has a very strong currency effect. For a simple reason, you have to know what's in the indices you're trading. And in the FTSE, lots of multinational companies are at play, and most of them have benefits in dollars, which means when GBP surges versus dollar, the benefits, the actual benefits of those companies just get dampened, which means they're making less profits when they get the money back in GBP. And the problem is, this impacts deeply the profits of those companies, and therefore their competitivity, though their prices, though their valuations in the market. So a rising GBP is a bad thing for FTSE. And I tend to believe that FTSE is still not giving me a signal to trade the daily chart. But look at where we are. We're in the trend channel, which means we're 4-hour context. And what I have in the 4-hour chart means I think a little upward move is still possible in here, but we already have a signal. Not the kind of signal I would blindly trade, because I still tend to believe that this thing has a little bit of gas to play. Like, I could think that GBP could consolidate, but I think anyway this thing is close to carnage. And whenever it will because stocks will be down, GBP will be up, which means it's going to be the worst case scenario for the FTSE. All right, consolidating, but the market cannot recover, not even breaking a resistance, and we're probably going to get to hesitating in this area, but probably making a lower low afterwards. All right, so FTSE is definitely in the portfolio already, but it's probably going to be reinforced in the forthcoming days. I'm just waiting for speculative confirmation. I think what I have in here is still not enough to be fully aggressive in here, but still, it's definitely, you need to be aware that anytime we break down supports in this thing, I'm going to be breakout trading. All right? So I'm closely watching for potential speculative trades to show up, trying to catch the top, but if I fail catching the top and if I see the market going down, I will definitely trade it accordingly. So stocks are down to me. I don't know how people can still figure out to be not that bearish. I think to me the odds are pretty simple. We have to at least go down and breathe a little bit. All right, so anyway, that's going to be it for most of the stock market. So we just follow through as well for the Nikkei, which is pretty fucking weak at the current time. I'm still waiting for the time this one will just surrender and gap down, because I expect down gaps in that kind of structures. Just one gap that we should normally not fill, at least not right now. I still tend to believe those markets not going down the ground for once and for all. I still tend to believe that we're going to go down, but we'll obviously recover from that. Like, everybody thinks anytime we've got a recession that it's going to be the last one, that the stock market is going to die, that the economy is overexhausted, and that obviously we're going to just riot ourselves and just go to anarchy. I still tend to believe it is not going to happen, at least not in the current context. If we consolidate, it was predictable. It's just healthy at some point. What goes up must goes down. And this is just what we might be doing if we go to recession kinds of trades. So in that perspective, we can gap down on this final impulse, and obviously we're going to go catch up on those gaps afterwards in the next bullish impulse that may follow through. So I'm still waiting, like I said, for a down gap signal in the FTSE, in the Nikkei, showing that the market is heading for its final bear wave. Same thing goes along for Shanghai. I'm waiting for Shanghai to down gap and not closing this gap. We must not close those gaps, just like we've done previously, something similar. I'm expecting that kind of thing. We're trading the final wave. So let's just take an example of this final subwave. All right, so in that down move, this was the final subwave, and I'm expecting pretty much the same behavior. A final wave, brutal, followed by everyone. Everyone will be bearish, even though after this wave you'll have to dampen your expectations. But still, we should have gaps. The first gap is normally the breakout gap, the one that signal the exhaustion move and the way that we're exiting from the speculative area, which means I would have speculate and be proven right. So I'm just waiting for this gap to show up and to be closed. I mean, opening with a gap, closing the day without filling the gap. And probably normally if we do have that, the day after will follow with a bearish flow in the market demand. All right? And this should be followed through normally by a second gap. So it's the rupture gap, the breakout gap, and normally we should have the acceleration gap, a second gap showing along the way, and normally then we have the final gap, which is the exhaustion gap. All right, so this is a perfect example of how to trade gaps in a market, in a cash market. So you can very well expect the first of those gaps to be the breakout gap, the one that breaks out of the trend of the bullish trends, terminates the bearish trend, and starts up the bearish trend. Yeah, the acceleration gap should be playing along the way, breaking through major support. So gapping, we could go there, build a support, and gap down below that support. It's going to be acceleration gap. All right. So let's just delete that so you'll have something more clear. All right, so let's say gapping down, going down, all right, exhausting, building some support, damn, acceleration gap, all right, we go there, we survive, and go there, and here, okay, when we go below the previous low is where we generally do the final gap, the exhaustion gap that we push and fill pretty soon, and whenever we fill it, you know the trend is over. We're going to range a bit before reversing. All right? That's for educational purposes only, all right? So it's not I'm telling you that the future will definitely be this. All I'm telling you is in here is I try to use this market to contextualize how gaps can be used to forecast actual trading scenarios. So first of all, I'm waiting for this first gap to show up. The following ones are not necessarily going to happen. It's just to give you clues and patterns I'm trading. So I think that's mostly it. No, we got to talk about that goddamn AUDNZD. I think this one is pretty great. Regarding what's happened yesterday evening, I was live when I saw this bearish candle, so I'm going to switch to lower time frames. I was in here, it was yesterday evening basically. I saw this, I mean ringing a bell on AUDNZD, I thought, great, we finally have that bullish breakout. And instead, I just figured out this freaking bearish move and I said, what the hell? Why are we going down? And I just said, okay, now let's put it rational. Emotions aside, what do you see? Delete the fucking prices, and what does that look like? Does that look like a bear market? No fucking way. It looks like a wave too. All right, we're definitely rising, reaching out context, reversing this context, and pulling back into wave. Even though this second wave is fucking brutally breaking through the context, I still tend to believe that what's going to happen into this, all right, back to context, pull back into trend channel, accumulating, and bam, breakout's going to happen afterwards. So I definitely like that because what we're building right here, and so far this is what's going on, we're just building the higher lows structures necessary for further breakout. So what we're doing in here is definitely good. So what I've done yesterday evening, even some people were saying, oh, AUDNZD is still fucking bearish, we've got to break it down, then it may happen. As once again, I don't know. But all I say is that yesterday, highs closed, I took a reinforcement with a stop loss below the previous low. If we can hold that, I definitely think this is one of the most attractive prices we'll have before a breakup to occur. I could be wrong, and once again, if we keep on rising, if we keep on falling in here and trending out of this move, I'm going to be proven wrong and I'm going to get out, pure and simply. All right, this is no market stop loss because you know this is an exotic pair and can have exotic rollovers, so it is not a stop loss on the market books. But if we do make 4-hour closes below that level, I'm definitely out of the game. All right, so let's put the prices back, but it's definitely looking like a wave too. No matter how brutal it has been, you can see the market is recovering, which means even though how bearish this could look like, guys are buying it, and me as well. So I think we terminated with this wave 2 consolidation. It's a pretty fucking low, deep retracement wave 2, but still wave 2. 2 waves to the downside after a cluster of bullish waves reaching out to context. So either this happens next, I'm wrong, I'm stop loss triggering, being wrong is part of the job and I accept if this happens, but if this happens, then all the guys who told me, Phil, you should stop trading AUDNZD, this thing is just going to fall apart and be bearish, I don't really think it is, and I'm going to just tell you one more thing, I just bought AUDUSD as well, because I think this one is pretty fucking interesting and it's just working crazy good. So what I've done is this, all right? I think this is a wave 2 as well. First wave, 2 waves pullback, trend channel. Oh yes, I definitely think this thing is doing this. So I bought AUDUSD as well, right in the exact same timing we were there. No, there. What am I saying? We were there. Yeah, yesterday evening we were there. So we were pullbacking, so I bought the AUDUSD. So I tend to believe this thing is pretty interesting. All right, I think it's going to play according. I think AUD could be performing in the next following days. All right, and like I said, to me there is a strong, crazy distortion in which AUD and USD is playing weekly support context, where NZD fucking USD is playing resistant weekly context, which is absolutely nonsense. And I still tend to believe NZD will just fall like shit, where AUD could be performing significantly better. We do have a bullish momentum in the weekly chart, so I just bought that signal. All right, and I figured it out that the goal in here is to reach out to the resistant context, and if this is out of context, which I think it is, I think this is just nothing. It's been happening for less than a quarter, than a quarter of an hour. So I don't think this is viable to consider as prices. I think this is just a fake rollover because of very low liquid conditions when we rolled over for the new year. So what I could tell is that this never happened to me. And if this never happened, what is this? Higher low, wave 1, corrective wave 2. We could be trending wave 3 afterwards. So I definitely want to buy these goddamn AUD/USD as well as I buy AUDNZD. But in here, obviously, low leverage. I'm not going to double down on my AUD scenario, in which I already put it quite some significant leverage. A little bit too much leverage, actually, but you know about that. All right, so I'm just putting a tiny speculative trade on AUDNZD. It's a daily chart, it's a weekly chart trade. Okay, so I'm buying this with a large stop loss. The stop loss is set below this low. Definitely the position sizing is pretty freaking low. All right, as just calculate this. I've been buying approximately this price. The stop loss is 4% and I'm risking 1%. So it's a 0.25 leverage, which is absolutely nothing. It's just dipping a toe in this market, and if it validates, if it breaks down, then I obviously double down, but for now, it remains highly speculative. Okay, so that's it. I'm going to stick to this for today, so I'll see you guys tomorrow with a new session on the US. God knows how it's going to play out. It's hard to say. I'm looking at Apple very closely as well. I think Apple is I'm going to reinforce pretty soon. I think anytime we get there in the 61 to 76 retracement area, I'm definitely going to take a short entry and not a tiny one. Apple, I'm going to sell that shit and pretty solid because I'm going to reinvest all the gains I made in here, which are pretty significant, with a stop loss in here, which means selling in there with a stop loss at the market top, which will be approximately 13%. Knowing that I made 8% gain out of this scenario, which means I'll probably sell Apple with a leverage 1, which means if we fall like shit, losing 50%, I'm probably going to get 50% return on my account. All right? And obviously, if this thing doesn't surrender and go historical highs, I'm just going to lose what I previously made on this asset. I think that's it. We're going to stick to this. Thank you guys for watching and see you tomorrow.